Welcome back. SoFi is rolling out a new ETF today. Its first offering in the fixed income market gives a new meaning as well to TGIF. For an explainer on that, Kate Rooney is with us with an exclusive interview with SoFi CEO Anthony Noto. Hey, Kate.
Hey, Scott. SoFi's new ETF is paying a dividend every Friday instead of every quarter. Ticker, of course, TGIF. Joining us now, Anthony Noto, CEO of SoFi. We should also mention former Twitter COO, Goldman Sachs partner, and CFO of the NFL. Thanks for being here, Anthony.
Thank you, Kate. Thanks for having me.
Of course. Good to see you. We want to get to a ton of different topics. There's a lot going on today, but let's start with this announcement. How do you match up what is typically a quarterly dividend with these weekly distributions to customers? Are you kind of holding on to that cash and then distributing that? And then what happens to the money in the meantime?
Sure. With SoFi Invest and all of the SoFi products, we're trying to differentiate on selection. And so within SoFi Invest, it's the only place you can buy stocks without commissions, ETFs, now 5 SoFi ETFs, as well as robo-advisor accounts and cryptocurrency. And our objective with this particular ETF is to continue to give our members access to investment vehicles that are right for them, give them access to things that are differentiated. And so most ETFs or bonds or fixed income securities pay out dividends on a quarterly, semi-annually, or annual basis. And so our view is that's sort of driven by old sort of thought processes and old philosophies. Why can't you pay out a dividend more frequently? The money's there, it's being accrued. And so we're going with a higher frequency payout on a weekly basis, sort of like your income from your paycheck.
And just to clarify, so you get that dividend every quarter and then you're paying it out to the customer on a weekly basis. Do you hold that cash in the meantime, and are you able to monetize that?
The ETF is investing in high yield fixed income securities. Those fixed income securities are paying out interest based on the securities that we buy. And so the overall administrator for the ETF is managing the cash flow so that it can pay out the 5 cents every Friday, as long as you own the ETF during the dividend payout period.
Got it. And some of these dividends, depending on what you own, could be pretty small. I see Ford in the basket, Teva, Wyndham as well. What should clients expect on average to earn in a given week?
If you, it's set at 5 cents per week, and depending on the stock price, the ETF price, which is started at $100, okay, it would basically be 5 cents per week times 52 weeks divided by the stock price over that time period. So assuming the ETF price stays at $100, 5 cents times 52 weeks would give you a little bit over a 2% yield annually.